It's May 2022 and it's time for a quick market update. Today we're in beautiful Paradise Valley, Arizona. I'm Craig Bennett with the Craig Bennett Group.
And I'm Brandon Bialkowski with the Brava team at Bison Ventures.
Let's go inside and sit down and have a talk about the current market conditions.
Oh, let's do this.
Brandon, I think what's on everybody's mind these days is current interest rates, right? The Fed had a decision yesterday. They raised the rates a bit. How's that affecting mortgage rates?
That's a great question. So the Fed raised the federal funds rate by 0.5% yesterday, and a lot of people believe that mortgage rates will be impacted by 0.5%. That's simply not the case. Mortgage rates are more geared towards inflation right now. So inflation is the biggest driver of mortgage rates. As inflation has crept up, it's now at a 41-year high. Rates have kind of followed suit. So it's not necessarily directly tied to the federal funds rate. The federal funds rate is more so credit cards, short-term debt.
Right. So as the Fed increases rates, that doesn't necessarily impact the mortgage rate.
No, it does not necessarily.
Right. Good. So we'll touch on that a bit later. One of the other things that I'm hearing a lot about is this looming recession that we're hearing about. And there's a lot of fears around that with buyers and sellers that I'm hearing. And one of the things I think is that people are kind of looking back at the last recession, which we often we often refer to as the Great Recession, right? This recession is just simply not that type of recession, right?
Exactly. This is more COVID-based. We were having major supply chain issues. And if you just look at what a recession means, it's consumers spending less money. It doesn't mean that the housing market's going to crash. Actually, in the last 5 recessions, mortgage rates have actually gone down during that time. And home prices have appreciated in 3 out of the 5. So it's not necessarily going to be like the Great Recession that we saw in the past. So I was reading a survey and it basically stated that 55% of current buyers would suspend their home search if we were to go into a recession. How do you think that would impact the market?
Well, I think with our current situation with low inventory, which we do have low inventory in the market here, that could actually open up opportunities for buyers who've been on the fence, buyers who are, frankly, maybe been trying to get a home, they can't get a home. So actually a pullback of buyers in the market could be a good thing to kind of restabilize the market for those buyers that can get into a home. The other thing that could happen is the sellers who have been on the fence because they don't want to sell because they're afraid they won't have a home to buy, that could actually get them in the market because sellers could say, there's an opportunity for me to buy because there's less buyers in the market.
Yeah, and they call that ghost inventory, where there is inventory out there if somebody else were to find a home. They just are not comfortable in selling their home if they can't find anything. So I think that's super important.
Absolutely. It's a conversation I have daily with my sellers. People who want to sell, they want to take advantage of the market, this great appreciation we've been having, but they're frankly a little bit nervous because if they do sell, where are they going to go?
Exactly. So according to the Crawford report, listing activity is actually increasing about 9% week over week. And a lot of that has to do with some of the demand fall off. We're seeing rising interest rates, obviously, some buyer fatigue, and also kind of going into the summer months, it's a little bit more seasonal.
Exactly. Yeah. That being said, in April, we still had 57% of all homes sold over list price. The majority of that, 65% of that, were in the $300,000 to $400,000 price range. But that still shows you that we're in a complete seller's market. Low inventory rates, builders are still being impacted by supply chain issues, drawing out build times. So one of the things I think as we look forward into the summer is that with this maybe less buyers in the market, a bit of a pullback, it's not a bad thing because sellers can jump into the market. Also, what we can see is builders kind of regrouping, getting supply chain issues caught up, and maybe not being so having so much buyer interest in their homes that they can't build them quick enough right now. So build times are so delayed because of the supply chain. And I think really until we kind of correct that, which is going to take a long time, this is not a quick fix, but maybe we'll get some catch up over this period.
And I think it's really important to reiterate that this is a very strong seller's market still. We're still seeing year-over-year appreciation rates upwards of, I believe, close to 24% this year.
Absolutely, yeah. And even with the everything we're hearing about the shift in the market, it's being portrayed in the media and everything, it's still an unbelievable seller's market. The good news is there may be a little bit more inventory for sellers to again, jump off the fence, put their home on the market, and actually be able to buy a home.
Absolutely.
So, Brandon, that being said, I think, again, it's a seller's market. Rates are inching higher or have gone quite a bit higher. Quick question, do we see that happening? What is the forecast for rates right now?
So until inflation starts to come back down, we're going to see rates start to creep up. Again, in March, we saw them increase as high as 1.5% in a month, which is just astronomical. I don't think we're going to see that in the future, those quick of jumps, but we are going to see rates continue to creep up until inflation does calm.
Right. Okay. Good. So, well, not great, but but I think
nothing we can do about it.
It's the reality of the marketplace when we're impacted by the supply chain issues that we have been, and the inflation that's happening right now. It is the market conditions.
Absolutely, and again, you're still seeing the appreciation gains. And should we go into a recession, stories tell in past, all the way back to 1980, that rates do go down. So
rates go down.
This is an opportunity to get in while homes are still appreciating at a rapid pace.
Absolutely. And so, that being said, that's pretty much what we wanted to cover today. If you have any questions, please feel free to reach out to me or Brandon. Our information will be below, and we look forward to talking to you.